Today's edition of the 600 Seconds of Trading. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. And happy trading to you guys. It's Friday after all, and let's take a look at the markets. But before we do that, need to bear in mind that trading financial markets unfortunately is risky. You click on the risk disclosure statement at the very bottom of the page if you're unfamiliar with the risks of trading financial markets. Okay, let's begin. This is your euro, and the euro moved to the downside. Yesterday I said that we could probably sell following a 50% correction. The market corrected, but did not necessarily go all the way up to the 50% correction. So my entry, or my idea to sell, was pretty much at 17.53. The market went as high as 17.50. So obviously, if you have maybe a broker with very wide spreads, you might get triggered. Now I adjusted the entry just a little bit. I think we can adjust it a little bit more, just to incorporate this high here and then yesterday's high. So just make this something like 17.45. And I suspect if we go back up to these levels that the market is probably going to try to sell again with stops about 18.37, which is up here. We talked as well about the pound, and the pound is doing good as well. I even put a little note about it, and the pound went all the way up and rolled over from 34.09. That was my sell level, so it should be up now with about 60 pip, and I think this market could head to the December 15th low, which is not only the low from December 15th but also the low here from this month, and take this level out, and we'll head down to the November 28th low. And here, as long as trade below this high, which is the May 22nd high, then there's no real reason to change your bias. The trend is bearish below this level. That's the way it is, and I'll continue to be bearish until proven otherwise. Here is, well, actually, not going to look at the dollar again. Here's the Bitcoin, and the Bitcoin is happy times if you're short. Not so good if you're a perma bull. Obviously it's trading at 7,400. If you would have bought beginning of time, you would have some really good gains. Most people that trade these markets do have produced gains, especially on being on the long side. But right now we're seeing a decline in the price, and it's going to the downside, and there's no real reason to do anything here. If it swings back up to maybe 79.81 or something like that, I think it's going to sell. Then we're going to probably try to trade to the downside, and then we'll see what happens. When it meets up with the trend line and the March low, if it wants to stabilize, probably bounce to the upside back to the middle, and then we'll see if it wants to continue to the upside or if it's just going to be capped. I think in general this is probably going to continue to trade sideways, and it might even take out the low. If you look here, published an outlook yesterday. The best thing is just to come here and just look through all of the ideas. But here's Monero, and Monero, look what it's doing. It's very close to its April low, and as I showed what I described in the article, which we're looking at right now, this one here, I think the market, it's very close to trade to the downside. So as long as below May 23rd high, which is the high from 3 days ago, this market, could easily slip under the April low. And when you trade below a low like this, you just need to look to your left. Where's the next low? Well, the next low is down here at about $75 per coin. So that's quite far away. So this would most likely cause the market to trade to the downside. I think we can potentially go down to the November 14th low or September 27th high at these levels. So 116 and 105. So that's a 60% decline in the coin from these levels. And it's interesting because if you take out the low here, then most likely people are going to say, well, there's no support for Monero, and if they start to look across all the other markets and they see less and less support, maybe something like Dash will take out its lows, then we could potentially see Bitcoin as well trade much lower. And you need to be tactical. I mean, you don't have to, of course. I mean, the thing is that people that trade cryptos online, it doesn't really matter what you would have bought. Most of the cryptos went up with multiples, so everybody feels like a superstar, even though they don't necessarily know too much about how reading technical analysis and charts. That's something people discover afterwards. I mean, I did the same thing. I started trading Forex. I made about 40% of my account, and I thought I was a superstar. And then you start to give up some of the profits, and then you start to just figure things out and realize that you actually don't know nothing. And that's just the way it works in financial market trading. And these people are giving up their profits. That's just the way it is. So you need to be educated. Alright, this is crude oil. The market, I wanted it to bounce from these levels. You might remember we said look to buy here. The initial stop loss was down here initially. Actually it was here, moved up higher. So he would have been out for a loss of about 1.8%. Now this market is trending to the downside right now. So we don't want to be a buyer any longer. We got stopped out yesterday already, and the market is now trading to the downside. We just took out this level, and the market could potentially try to reach these highs. These highs are the what is it? April 30th high, and that looks like that's what it's targeting. Now this is people that have been buying and are under pain. It's not necessarily people that are selling here because they want to make money on it, because risk reward ratio is not too good. Because overall, if you're looking from a bigger perspective, if we go back down to these levels, maybe people are gonna look to get involved again. So you could potentially make maybe 79 cents, and if you short here, I guess your stop loss needs to be up here somewhere, if not at the high. So it's a bit of a difficult situation. Now this is a little trick, and what some people do is that when they know that the risk reward ratio is just bad, they try to scalp things. And here, if you look at it from this perspective, you have a high up here and you have a low here. So maybe they'll say, alright, I'll sell here, put a stop loss here, risk 105, and if it goes down, I'll make 84. So not even that scenario is good. It's only if they sell here and then the market quickly goes to the downside, so they can put their stop loss here, so they in essence risk 62 to make those 85. That makes sense. The biggest issue though with trading in 30-minute, and it's just that it's very difficult to be profitable when you go on that short term. That's why I like the 4-hour. When I started, by the way, everybody was in love with the 5-minute. Even I did the 5-minute for a year or two until no, actually I take that back. Not for a year or two. I did try it. 5-minute is ridiculously hard to trade. It was funny when you go to these events and people would rave about the 5 minutes, and then you would ask them, okay, so for how long have you been trading? And then they would say 3 months. So obviously in any sort of strategy can work good during 3 months. You only know if you're really good. Well, obviously you know if you're good if you start trading, make money, but maybe 2 years, that's how you know, because usually you'll have success 6 months, 9 months, and then you have a drawdown, and it's how you manage that drawdown, and if your strategy manage that drawdown, that if you, well, obviously the idea is that you have a drawdown, maybe you have a drawdown of 6 months, maybe a year in worst case, and then if you can recuperate that and get ahead, that's when you know that you're using is good. Okay, this is gold. The market is bearish below 13,115, and you see the market never pulled back. It had the breakout. ideally would have had the breakout and then immediately just go to the upside instead of spending a lot of time here. But I'm not gonna worry too much about this. The market is bearish below the high. You just put a fibs, these are 3 levels, and the market should just roll over here. And I'll be bearish as long as it's below this level. Here's the DAX. The DAX is a difficult one. The DAX just needed a little bit of a shake-up. I think people got a bit complacent. It moved up and not much happened. Had a few bank holidays, and on Monday the US is closed, and as well the London is closed. So there's gonna be not too much volume, and I think here just that shake-up. We needed a little push. Of course, it was on the back of the cancel meeting between North Korea and the US. But if you read that letter that Donald Trump wrote to Kim Jong-un, it's not a letter of anger. It's almost like it's a letter. Oh, it's not even too many threats. I mean, it's a nice letter, I think, for Donald Trump, and it shows more of his softer sides. So they're not gonna go just because they cancel the meeting. They're not gonna go start threatening each other again about nuclear war and who has the biggest button. So I don't think they're gonna go back doing that. Maybe they will, but I don't think so. It's a little bit like a market, a little bit of a dip, and then hopefully they get back on track, and Donald Trump gets the Nobel Peace Award. So I don't think markets should be shaken too much by of it. Technically here though, the market took out our stop, went to the downside, it's moving up a bit, and for now it's capped by this high. Now this is the short-term trend defining level. Below this level the market could revisit the low, and then it could alternatively just push to the upside. Now I wouldn't trade this right now. I don't think it makes perfect sense to sell here. I think to sell, maybe you need a longer period of sideways price action, or some more of a coordinated decline across the world. Because when I look at my S&P 500, well, it's bullish. I said here a few days ago, look to buy here on the upper end here. Is the Nasdaq as well. I'm not sure I shared this guys with you, but I've been telling my people to buy on dips, and bounce from the low. It took 3 attempts, but it bounced from the low. Microsoft just hit a new all-time high. Netflix had a new all-time high. So there's a ton of stuff, of course, that did not hit an all-time high, but I don't really foresee the situation in the US and in the stock markets to change. So with the Nasdaq 100, the Dow and the S&P still looking relatively bullish, then why should we anticipate the German DAX to move down? Let's also talk about the Italian market. You probably read that. We have quite extensive coverage on that here in Trade Captain. And everybody's worried about the general election outcome over there. But if you look at the stock markets, well, hey, this is just normal volatility. A lot of ups, a lot of downs, a lot of ups, a lot of downs. And this latest down is not much more aggressive than things we've seen in the past. So maybe we'll talk about Italy for another week or so. Maybe the Italian stock market goes down to 22,100. But at these levels, people have been buying. So most likely, I suspect, the markets will buy here again until proven otherwise. I mean, risk-reward ratio-wise, it's not looking that bad. You risk 3%. If it rallies to the upside, you get 9. I mean, that's 2 times your money, or 2 times your risk. So that's not bad. So most likely, I wouldn't be too worried about the Italian situation. Maybe we'll get Italy to leave the euro, but if anybody followed Italian politics over the last 20 years, then you know that not much actually is happening there, like from a political perspective and economic indicators and things like that. They don't really move too much. So again, I don't really think too much is gonna happen. I might be wrong, but it's all about those residual ratios and then probability. So yeah, we're probably not gonna have a Italy exit right now. And with that in mind, why is everybody panicking? Okay, guys, let's see if we have any questions. Don't forget to check out the technical analysis section. And don't forget to like the video as well. So no questions today here, or no hellos either. If you do have a YouTube account, don't forget to say hello. That's always nice. And if you're watching the recording or watching it live, don't forget to hit that like button down here, like that. Okay, guys, have a great day, and I'll see you guys tomorrow. Sorry, Monday. Sorry, Tuesday. Bit confused here. It's the end of the week. Why Tuesday? Well, because on Monday is a bank holiday in the UK and in the US, and I'm based in London, so I'm gonna be in my bed most likely at this time on Monday, enjoying my day off. Have a good weekend and happy trading.